Good morning, it's Monday the 23rd of January, and welcome to our regular Monday morning roundup of the coming week's economic highlights. As always, we'll start with a quick rundown of the key economic numbers being issued this week around the world's markets, and then we'll dive into some of the more significant highlights afterwards, with our own thoughts and analysis. So let's get straight to it. So the economic numbers being issued this week start today with an update on the Eurozone's consumer confidence. On Tuesday, the Eurozone, the UK and the US all released their latest service and manufacturing PMIs. And we'll be talking about these in more detail straight after this. On Wednesday, it's the turn of Australia to release their CPIs, the UK their PPIs and the German IFO business climate. And finally on Wednesday, it's interest rate decision day over in Canada, which we'll discuss in more detail in a moment. On Thursday, the US releases its latest durable goods and the latest Q4 GDP figures, which we'll discuss afterwards, and the US initial jobless claims and new home sales. On Friday, over in the US, we'll get the latest core PCE numbers, and the companies that we'll hear trading updates from this week start today with Baker Hughes. On Tuesday, tech giant Microsoft report their Q2s, and we'll be giving our thoughts on that in a moment. We'll also on Tuesday hear from J&J, General Electric and 3M. And finally, AB Foods are due to release a trading update also on Tuesday, and again we'll talk about that in more detail straight after this. Wednesday sees Q4 earnings from Tesla and Q1 results from EasyJet. We'll examine both of these afterwards in more detail. And also on Wednesday we'll hear from ASML, IBM, Boeing and US Bancorp. And on Thursday, we'll hear from Visa, MasterCard, Intel, Diageo, American Airlines and Wizz Air. And finally, at the end of today's video, we'll be giving our thoughts on oil major Chevron's final quarter results of the year due out on Friday. And joining them at the end of the week will be American Express. Well, the Bank of Japan was under the spotlight last week after surprising the market by keeping policy unchanged, even as inflation rose to 4% year on year. The yen tumbled sharply and could see further volatility this week. The Bank of Canada will also be in focus this week with another slowdown in rate hikes expected as they release their news on Wednesday. In addition to central banks, earnings season steps up a gear with Microsoft and Tesla due to report this week. So let's take a look at this week's bigger stories in more detail. Associated British Foods are due to release a trading update on Tuesday. After falling to a 10-year low in September, the share price has rebounded by almost 50% since, helped by positive full-year results. The owner of Primark reported a 22% rise in annual revenue and a 49% increase in adjusted profit before tax. Primark, which is responsible for around half of all sales, saw revenue jump 38%, despite a challenging economic backdrop. Investors will be watching to see whether the first quarter is as lucrative. A recent update from Boohoo suggests that customers are returning to the high street, which could be a positive for Primark. Furthermore, investors will be hoping that the food side of the business matches peers posting a solid performance over the Christmas period. And in this Eurozone, the release of the economic area's latest PMI figures on Tuesday will provide the first glimpse into how services and manufacturing sector activity are performing at the beginning of the year. Well, December's PMI showed that business activity contracted by less than expected, boosting optimism that a recession may not be as deep as initially feared. The composite PMI in January is expected to decline to 48. That's down from 49.3 in December, but still up from November's 47.8. And finally on Tuesday, Microsoft are due to report their fiscal Q2 earnings, which comes hot on the heels of the tech giant announcing that it will slash the workforce by 5% as sales slow across the business, and after the tech giant saw its headcount grow by 50% since the start of the pandemic. Wall Street expects a 2.4% year-on-year increase in revenue to $52.97 billion, which would mark the slowest top-line growth over 5 years. Meanwhile, earnings per share are forecast to decline 6.9% to $2.31. That's the first decline in earnings in over 8 years, as demand falls across the board and costs rise. Budget airline EasyJet are due to release their Q1 results on Wednesday. Well, the company's share price has risen over 30% since the start of the year, rebounding from a 10-year low of 276 pence reached in October, which suggests investors are expecting this year to be an improvement on the previous year's performance. While the airline industry is recovering from COVID and the airport chaos of last year, recession fears are still a threat to demand. Analysts expect revenue to rise to £1.35 billion in Q1 from $805 million reported the previous year. Passenger numbers are expected to rise to 17.4 million. That's up from 11.9 million last year. Even though capacity is expected to remain well below pre-pandemic figures, higher prices are helping revenue to recover at a faster pace. Costs will, of course, remain a key focus as wages continue to rise. And while fuel hedging has limited the impact of rising oil prices, there is still some exposure. Tesla is expected to report Q4 earnings on Tuesday, and that's after the closing bell. Well, Wall Street expects earnings per share of $1.15. That's up from 85 cents in the same period last year. Revenue expected to be $24.96 billion. That's up from $17.72 billion in Q4 2021. The earnings come amidst rising questions over the impact of the deteriorating economic backdrop on sales and how much profit the EV maker is willing to sacrifice to fend off the competition. The EV maker announced price cuts in the US and Europe earlier in the month to retain their market share as competition heats up. The price cuts mean that Tesla will see margins and earnings hit. Markets also question Tesla's ability to reach the 50% growth target for deliveries in 2023, which is reflected in the share price, and that does trade around a 3-year low. And to wrap up the midweek, the Central Bank of Canada is due to make its latest interest rate decision. Well, the central bank has raised interest rates from 0.25% to 4.45% over the past 11 months. In September, the Bank of Canada surprised the market with a smaller than expected 50 basis point hike amidst concerns that hiking too aggressively could of course do more damage than good. Well, the central bank hiked rates by a further 50 basis points in December amidst rising concerns over the health of the housing market. Now, with rates in restrictive territory and inflation falling, central bank has become much more data dependent. However, core inflation has remained stubbornly high, and December's jobs report was also solid, suggesting that there is still more room to hike those rates, although the pace could slow further to 25 basis points. And on Thursday, the US are due to announce their latest GDP figures. Well, the US economy is expected to have grown 2.8% in Q4, quarter-on-quarter annualized. Slight slowdown from the 3.2% growth seen in Q3, but still a marked improvement from the 1.6% contraction seen in Q1 and 0.6% contraction in Q2. Even so, worries over a US recession gathered pace last week after weaker than forecast retail sales data, which sent US stocks and the US dollar lower. Softer than expected GDP data could fuel those recession fears further. And finally, on Friday, oil major Chevron are due to release their final quarter results. Oil and gas stocks outperformed in 2022 and could see a repeat performance in 2023 after the IEA warned that oil demand could reach a record high in 2023 as China reopens its economy and as supply from Russia, of course, remains restricted owing to Western sanctions. Wall Street is forecasting a 73% year-on-year rise in Q4 adjusted earnings per share to $4.43, which could put full-year adjusted EPS on track to be double that of 2021 and a new record high. So those were the big stories of the week. Let's wrap up with a quick look at the dividend announcements coming out this week. Well, there are no releases due out in the FTSE 100 this week, but in the FTSE 250, we'll hear from Foresight Solar Fund, Pennon Group, City of London Investment Trust, Schroder Oriental Income Fund, Bankers Investment Trust, and Sequoia Economic Infrastructure. So there you have it. Overseas markets will be the topic of conversations this week, with interest rate decisions and a slew of production and inflation data due. Well, here in the UK, the cost of living crisis is clearly biting, as evidenced by a host of interesting lagging indicators. For example, did you know it's almost impossible to find any stock of dehumidifiers? Well, why would that be relevant, you might ask? Well, when you discover the reason they've sold out everywhere is because people are desperate to cut their outgoings and are consequently switching off their heating in their houses despite the winter weather. So, as a result, damp is now running rampant throughout countless homes, and of course dehumidifiers are then selling out to save these structures from further damage. Well, the moral of that story being turn down your heating but don't turn it off. And of course, from an investor's point of view, some interesting opportunities. But of course, if you're looking for solid investment advice, don't forget to get in touch with us here at Atlantic Capital Markets. We're always here with our finger on the economic pulse. So as always, don't let me forget to remind you about our app with our award-winning trading signals, and why not check it out for yourself? It is of course free and it does work on all your devices. So once again, thanks so much for watching. Don't forget to click on that subscribe button to make sure you don't miss out on our regular financial updates with our expert market analysis and opinions. And until next time, we hope to see you next week. From all of us here at Atlantic Capital Markets, have yourself a great week.